Hey guys, thank you for tuning in to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. Today, I want to talk to you guys about three stocks that I think are going to do really well over the next 3 to 10 years. Now, these three, oh, yes, if you'd go ahead and subscribe to my YouTube channel, it would let YouTube know that I am creating content that others should see, and it would help me out quite a bit. So thank you in advance for doing that. But I want to talk to you guys about these three stocks. PlayStudios. I think this is a one-of-a-kind stock on the stock market. We have Retractable Technologies. I think this company is building upon, expanding upon a legacy product such as needles and medical equipment. I think this one kind of reminds me of Enphase back before Enphase was like $1, then $5, then $2.99, and then $300. And then the last one is Addvantage Technologies Group. And I think that one is just a slow burn growth over the next 3 to 10 years. But with that said, let's take a look at their financial profiles on Finviz and maybe look at their charts if we have some time. Let's go ahead and get started. All right, guys. So the first one we're going to look at is just PlayStudios on Finviz. Let's just do a high level calculation of what the stock is worth currently, given sales, debt, etc. So, and how many shares are outstanding. So if we scroll down, we can see their sales right here. Their income, they're losing about 7.9 mil, but they're making around 280. And there's 127 shares out there, but there's only 64 out for the float. Sorry. So there's 127 shares outstanding, but there's only 64 million available. Sorry. All right, so let's just pull up the calculator and let's do 281.3 minus the 7.9. Oops, 7.9. That gives us 273.4. And let's add how much cash they have as well. So we can see their current ratio and their quick ratio are really high, and this is because they have cash. So really quick, let's incorporate their cash. So we're at the balance sheet, we're at the cash and equivalents, and we see 213.5. So we're gonna add 213.5. Okay. So now we take cash and sales and we divide it by the total shares outstanding, 127.19. I think the fair price of the shares is around 382. I think that's totally okay. If you ask me, stock is at 349. It's probably going to go under $2, or I'm sorry, under $3 just based off macroeconomic conditions. Um, we can see institutions are buying like crazy, insiders are buying like crazy. So again, I think this is more of a microeconomic, but let's say we take the 486.9. That is the sales plus the cash. And let's divide it by the shares that are only available. So 486.9 divided by the shares available of 64.92. And it comes out to about 7.5%, 7.5, which is $7.50 fair value price. Again, these are really rough numbers. This should not be used to calculate the share price, but if we're looking from about 380 to 750, that would be somewhere to where we should see the stock be. It's at 350 right now, 349. So technically it is undervalued. And again, we can see the target price is $5. Again, that's confirming it's undervalued because it's 349 and not $5. And we see insiders and institutions buying like crazy. Just another sign that it is undervalued. So PlayStudios is a unique company because it is the only company listed on the stock market that allows you to get real life rewards for free, essentially. So you play at home on your cell phone, you get casino like rewards, you get comped rooms, comped meals, comped drinks, free food, free entertainment, all over the world, all over the US basically. A lot of it is in Las Vegas, but it's through partner hotels. So you could go to different states and use your points there for free rooms or whatnot. Same with restaurants. So basically, you play for free. You get the same benefits as if you were playing at a casino, but you're not spending any money. Now, the good thing about PlayStudios is you can actually use real cash to buy coins, which can then be used to grow and play other games or transfer into points to buy comped rooms or what have you. So that's one outlet of income there. They also have advertising, which is another outlet of income there. Their platform is really, it's pretty intuitive and, I don't want to say it's addicting, but it's something that people can do at home for free on their phones. So in times of recessionary periods or lockdowns, what have you, this is kind of a ideal game to play because it's free, it's at your fingertips, and you can win real life rewards. So yeah, this is a great company. I would encourage you to look more into them. I have been buying this company up, and I think this company could go into 40 plus over the next 10 years, honestly. Um, this company does have backing from Activision Blizzard and MGM, which is a huge hotel casino here in Vegas and all over the world, actually. So, great company here. Um, Again, I think this one could 10x over the next 10 years. Do your own research. This is not financial advice. Let's look at the next stock or company, which is going to be Retractable Technologies. And let's do the similar scenario that we just ran here, or I'm sorry, that we just ran with PlayStudios. So this company is a medical company, and we just had a huge health crisis. So there was obviously an inflated period. Now it's coming back down to reality, which is totally expected. So let's do the sales 154.9. Let's add the cash as well. Cash is 29 million. Let me reset this. All right. So plus 21 million. I don't remember what else is with that. So we're going to divide it by the shares outstanding. So this is going to be our conservative price target. So 32.95. So $5, I think if this stock was around $5, this would be understandable. I believe this stock is currently undervalued, and I think that represents itself based off the PE here, the price to earnings is showing it's extremely undervalued, but again, coming off a health crisis. So $5, and if we take the 175.9, that is our sales in cash, divided by the shares float, which is the shares available, it's going to be 13.46. It's about $13. So right now the stock is about $1.98, almost a 10x there, almost quite, maybe 7, 8x. Not bad. So yeah, I like this company because they are slowly innovating on a legacy product such as the needle. They have retractable needles, which is came in demand for the health crisis, but there's also several other things like about this company. If we look at their sales over the past 5 years, it's about 44% growth. That is amazing. EPS over the past 5 years is 66%. What we like about this is that this is going back even before the health crisis. So this company has continuously hit their targets. We have insider transactions at 179%. Again, the insiders only own about 1.4% of the company, so nothing too alarming, too crazy. It is a low float company, meaning it could be very volatile. And given this where we are today, it would probably be volatile to the upside. But excuse me, let me move my head really quick. We can see that we have the 200 SMA, the 50, this bright orange, and the 20. The stock has got rejected up here, which is fine. Nothing disconcerting about that. And now it's going to have to, basically, the stock's going to have to fall more as these simple moving averages start to come lower and lower to kind of meet the stock price where it's going to be. So I do see this going to 150, maybe a dollar, but the company has quite a bit of cash, 21 million cash. They're making their income is 31 million, so cash is king here. They have little to no debt, not a concern. My PlayStudios did not have any debt as well. Just want to call that out. So, uh, really good looking here. Let's just look at the insider buying. How big is it? Um, Leonard, Braden, Michael. You know what? Let's do some homework on him one day. Let's see who he is. I guess we could just do it together now until my computer freezes. Let's see what he holds. Maybe he's just a pump and dumper. Maybe he's got some good companies. I don't know. Um, all right, so we see retractable. It's a lot of ads for the moment. I know if we just go to Fintel, let's go to 13DG. Okay, let's just go to Fintel and look him up. So I'm going to Fintel, which is another site to look at large institutions or investors. So we're looking up Leonard, Braden, Michael here. And maybe this will show it, or maybe this is an ad. Nope, okay. So he owns quite a bit of companies. Just a price, cost basis. Okay, so ASTC, Build-A-Bear Workshop. So let's just look at Build-A-Bear really quick. I just want to look at their financials to see if he's like buying into crap companies or not. Build-A-Bear is not my preferred stock, but um, I'm just looking at it to see what it's like. Okay, they have strong sales, no debt, undervalued. Looking at the PE, my head's in the way, I'm sorry. Okay, sales 443 mil, that's great. Price to earnings 4, which is amazing. 15 is pretty average. Quick ratio 0.4, meaning they're a little leveraged at the moment, but their current ratio, their assets dwarf their liabilities. No debt. 13 million shares float. You know what? This is attractive, honestly. Uh, yeah, this is attractive, but it's going to continue to get beaten down because it fell through the 20 SMA and it's going to pop its head on the 50 right here. So, and if we look right here, the 50 SMA was just built on the monthly time frame. So fairly new stock, but at these current levels, this is a desirable stock in my opinion. I think it's undervalued here. So yeah, you know what? Leonard Braden Michael, he is doing great. So we have PlayStudios, Retractable Technologies, ticker symbol MYPS for PlayStudios, RVP for Retractable Technologies, and then the last one is AEY, which is Addvantage Technologies. And we're going to do the same type of analysis here. Looking at the monthly chart, again, my head is in the way at the most inconvenient time, but we can see that the 20 and the 200 right here are about to cross down on each other, which means the stock price is likely to go down. Totally fine. So let's just take a high level look at the financials. Okay, so long-term debt, very low. Current debt, low as well. Current ratio, very good. Assets dwarf liabilities. We always want that. Quick ratio. Quick ratio is 0.8, meaning they're not too over leveraged, which is good. Insiders own 41% of the stock. That's pretty big. That is pretty big. Usually, insiders know more about the stock than other people, so that is interesting. Let's run our calculations. We're gonna do sales minus income here. So 90 minus 1.9. And let's add how much cash. I don't think this company has much cash on hand. Let's look. They have 2.6 million, nothing crazy. And again, here's our total assets 27, total liabilities 16, so we're good there. Okay, so cash is just 2 million basically. So let's just do plus 2. So 90 mil. And let's divide that by 13.19. And this is going to give us our conservative price target of $6.80. And let's go back to our $90, 90.1. That's our sales minus income plus cash. And let's divide it by the number of shares available, which is 7.65. So 11. So the stock between 5 and 11 is getting pretty ripe. So this current price of 176 is currently undervalued if you ask me. Another sign that's undervalued is we have insiders owning quite a bit. I don't know if we have any recent transactions on hand. No, we don't. So this one again is just kind of a slow burn for me. I think this company is, I want to say, just a slowly growing company that's going to be more relevant as time goes on. It's basically wireless infrastructure services and network communications equipment to a 5G world, whatever. So basically towers. These historically have been pretty safe investments, as this is something that's going to continue to be needed over time. And if we look at the chart here, the stock price of 176 goes back to as late as December 2015. The stock price got up to 650 at one point. So yes, I see more downside with AEY, but I think this is one to buy and hold for the long term. Again, if we're looking at patterns here, it could be a cup and handle, but honestly, this is like a multi-year hold and add, basically, if you ask me. We have institutions adding as well. That's positive 0.63. So that is good. Again, I own positions in all of these companies. I'm going to continue to add as they continue to go down. I would like to get a 5 to 6 figure position in all of these companies, and I would want to sell after my 1 year hold date to get the maximum tax benefit. Hopefully multi 100% to 1000% gains, but we never know what the future is going to hold. So just putting that out there. This is not financial advice. I did not bust out Thinkorswim to chart these out because I think there's more downside for sure. So just calling that out. I would say if you have time, chart it out, go to TradingView, Thinkorswim, what have you. So yeah, thanks guys for tuning in. These are all companies I'm holding and adding to. We'll probably see these pop up on my $5 a day challenge in 2023. That is still a thing. I forgot to mention it on my last video, but yes, $5 a day into, looks like it's going to be Webull now. Public did not allow for automatic transfers. So yeah, there's that. But thank you guys for hanging out with me. I'll see you guys soon. Bye.